Welcome back to Reformed Millennials, the podcast where finances, economic trends, and sports intersect. Cam and Joel help listeners better invest their time and money. Also, it's important for listeners to understand that investing in equities, fixed income instruments, and/or alternative asset classes involves substantial risk of loss. Any action you may take as a result of the information presented in this podcast is your own responsibility. The information in this podcast is presented as a general educational, informational, and entertainment resource only. While Joel is registered to provide investment advice as an advising representative with Gold Investment Management, Ltd., a firm registered as a portfolio manager and located in Edmonton, Alberta, this podcast does not provide individualized investment, tax, or insurance advice, nor is it meant as a recommendation to any listener to buy or sell any specific securities or otherwise take any other form of investment action. This is an excerpt of the full legal disclaimer that's available on the landing page of this podcast, which includes whether Joel Shackleton, Cam Pitchers, or GIM have any ownership or interest in the specific securities discussed in this podcast.
Cam, welcome to the new studio.
Isn't it amazing? Look how far we've come.
Honestly, 3.5 years ago, I had no idea that I would be trying to be sitting across in person with somebody in a studio session, trying to talk about markets, sports a little bit, and kind of finance in general. It seems a little bit surreal. However, I'm excited. And I think this is, I don't know, signs of the times to come.
Yeah, it's so neat. Even just coming up here, obviously, it's just kind of, obviously there's two other people in the room here with us that are now helping us out. Already forget the name. Sorry, boys. I'll remember that for next time. But just cool to even see, like, we've been just putting this together ourselves and mostly you doing the editing and putting the videos together and teaching me how to put a mic on properly and everything like that, and being able to just, ask questions and them have answers immediately. It's such a cool thing to see how far of this industry has come, and this like little segment of the industry in terms of like podcasting content, etc. So it's super cool. And
one of these days we're going to have a sports desk, and we're going to be sitting at it.
Yeah.
And that'll be a thing. I'm giving us 5 years.
And prompters too?
Yes.
That'd be super cool.
I need that.
And the other thing is I got a little bit of nervous energy today for this for sure. Cause we've been doing it for a while. I know how many people we have download our episode, which is amazing. Thank you for doing that, everyone listening today. But actually having two physical people in the room, it's like, oh my God, there's actually people here listening to us.
Yeah. And there's no way they're going to think this is interesting either. But let's quickly go over what was, for myself, the most depressing thing that's happened in a long time, watching the Oilers lose.
Yeah, a little bit of a post-mortem here. I'm glad we didn't record. Usually we'd be recording immediately after what happened last night, Sunday. That would have been probably not the greatest. You came right from the game, so you actually would have had probably some real hot takes last night, but probably not a true sense of what you actually believed. But it is too bad. Sports are, and we talked about it last week or week before about how much luck is involved in the NHL. And I actually wanted to quickly, like, you talked about the ratings and stuff, or we went back and forth on ratings and how positive it was out of the first round and like kind of the initial. I'm thinking it's going to absolutely plummet now when you consider, we are not going to watch anymore, or at least not to the same degree, because we're a diehard fan of a team that has just lost, and we're probably not going to tune it again until maybe the Cup Finals, when it's like a deciding game or something like that, to see who's going to be lifting the trophy. But I just think in general for hockey, what's happened in this last, like, who got eliminated in the first round and now who's out in the second round is not good for their numbers. So I'm really interested to see what it is, especially in the States, because they've kind of had this general uptick of, the general sports watcher, or your non-diehard fan that has been watching, and there's been some support for that. But you're talking about potentially a Seattle, Vegas, which Gary's going to love. The commissioner, he's going to love that. His two expansion teams in the conference final, and then Carolina, Florida, his two Sun Belt expansion teams from years ago in the final. So he'll be excited. But from a TNT, ESPN standpoint, I'm assuming they don't love these matchups.
Yeah.
Even how maybe the games could be very intriguing. They're obviously 4 very good teams, but you have basically no superstar power left. And you also have no major market teams. So it's going to be very interesting to see what those numbers come back like.
So I have a hot take. This is, if it's not this season, next season is Gary Bettman's last season. And I think he either gets fired by the owners or, and this is just my opinion, and obviously hot off of a Oilers loss, but I've come to a new conclusion about where we are with regards to the NHL sports viewership, et cetera. And I think it's shifted from major markets mattering to major players and personalities mattering. And while obviously in the NBA you have big names on basically every team, I think it LeBron James supersedes which team he's at. He could be in Cleveland and it didn't matter. People were going to pay attention.
Totally.
Same thing now applies to the to the NHL. And nobody on Vegas is interesting. Nobody on Seattle. I can't even name 3 players on Seattle. Same goes for the other 2 in the East. And that is a problem. So in my opinion, you're going to see the biggest drop off with regards to viewership versus round 1, round 2, going into round 3 and 4. I mean, I'm not going to pay attention to a single game. I unfollowed the NHL. I unfollowed the Oilers on Instagram. I'm done.
All
until
the
next
Edmonton
year.
media.
Yes.
Yeah.
Basically everybody out. We had people in our group chat being like, Joel, are you, or not Joel, but imagine what 630 Ched sounds like right now. I'm like, I'm not even thinking about turning that on. Now, obviously that is going really too far the other direction. And you have the draft, you have all these interesting things. But quite frankly, I think we've now seen a change in the way in which people consume their sports. And we are moving away from that hot market, big market, large population being important to being in certain series to it now being the player, the person.
For sure.
And that is...
I think what you can always like fall back on is the major markets. Like when you do have the New Yorks and the Bostons and the Torontos and like, I mean, any Canadian team, realistically, you're going to get a huge push from that side of the border for like the NHL, et cetera. But I agree. I think if in an ideal world, if you were to ask anyone, they want their major players in their major markets just to have that kind of double-edged sword in that case, because I think that's always a good thing to fall back on. Like, I mean, the draft lottery would have happened right after our recording last week, and the next one, quote unquote, is going to Chicago, which everyone thinks is. I mean, the teams that were up for Columbus, Chicago, Arizona. So, I mean, Chicago was really realistically the only like big market team in that grouping that could have landed him. And or I guess haven't landed him technically, but it's a foregone conclusion that they're taking him. And so that's an instance where it's like this player would have been a big deal if he went to any of those other teams because that's how good he is. Or you don't think so, actually. That's another one of your hot takes, but we won't get into the junior scouting of Joel Shackleton here right now. But the fact that he's landed in Chicago for a team that is basically cratered, but was a marquee team for them over the past, like for the league over the past decade, 15 years now, I think they couldn't be happier. So I think in general, I agree with you. If you're a good enough player, like we talked about in the NBA, like you got Giannis in Milwaukee, like again, you and I driving up to Green Bay for that game, we drove by Milwaukee. We're like, what? Why would anyone stay here past the, like their minimum requirement essentially? But it's when you're that good of a player and you're marketed correctly and the NBA, they have the reach that they need in order for a player to become, so an average fan in Edmonton, Alberta, if you're a Giannis fan, you're buying a Bucks jersey and Milwaukee loves that. Mm-hmm. It's good for their franchise, good for their value, et cetera. So, I could see Gary kind of losing some confidence, but at the same time, I think he's with my understanding. Obviously, I'm not an insider, but my understanding is that the owners, he's built up a lot of goodwill with the owners over the years with how well he's done on negotiations and the amount of money that he's brought in on expansion. And I think a big thing too, it keeps circling back to the Senators sale. I mean, if that number goes for what it's being reported at, like that's going to mean a whole lot more for all the owners involved. If you consider Ottawa being kind of a mid-tier team, and if they're going to end up going for $800 million plus, maybe even $1 billion as it's been rumored, I mean, Gary's in those rooms where maybe, he's pushing the narrative for his owners to make sure that that number's as high as it can possibly go. So I actually like to think that he's probably going to go through one more negotiation. So the PA they have
26.
Yeah, I think it's 2026 is when the next one, because they extended it after kind of the COVID. It was supposed to be earlier than that, and then they kind of pushed it out because of all the payback and stuff like that they had to do for the players, to the owners, for the cost covering over the COVID years. So, but yeah, I mean, definitely a sad day in the capital region here. But you know what? Sometimes it just doesn't break your way, and we have two of the best players. So for everyone out there that's sad today, I think we'll be back again next year. But it's hard to say that today.
It's sad because we had expectations this year, and we didn't get a save, and that's just the way it works.
Yeah.
Moving on, market update. Last week was boring for sure. But not for the reasons in which maybe some other people think it might be. For me, I had to watch a lot. I had to pay attention to a lot of people. Why? Well, we had CPI that came in kind of on target, or even just slightly under, 4.9% in the United States. It's quite clear that headline inflation is receding. Mm-hmm. It's just a fact. However, that services core CPI is maintaining its stickiness. I mean, it hasn't moved in 5 months in the United States. Mm-hmm. And with those two data points coming in, you had two separate takes from both sides, from people that were previously bearish to now becoming bullish, and then those that were bullish now becoming bearish. And I have a couple takes that I actually think are both relevant. Recently, Paul Tudor Jones just talked about how the Federal Reserve can now basically, they can say that they've won. They can tell everybody inflation's done. And then you have the other side of the coin, where you have Bob Elliott, who, for me, ex-chief investment officer at Bridgewater, the largest hedge fund in the world. I really enjoy his takes. He had a shift in opinion where he's suggested that inflation is higher than the Fed's mandate. It's not on path. And this most recent CPI report is just one additional data point that is showing that inflation remains elevated and is going nowhere. And sadly, we aren't seeing the supply chain solutions fast enough to solve the core problem, which is our housing problem. And if you look at Canada, it's even more of an issue than it is in the United States, especially considering our massive immigration. And I think that if we don't start to approach this with additional solutions to just increasing rates, I'm not really confident that we're going to see that soft landing that everybody's been suggesting. And then you combine that with Stan Druckenmiller, who, I mean, for those that are really into markets, he is a market god. He would be on that Mount Rushmore of, if you were to put investment people up there, he would be right in the middle, right beside old Warren Buffett. And he was at the Sohn conference pitching some of his ideas, kind of giving the lay of the land for the macro. And he himself was very bearish. But he always is, sadly. Mm-hmm. I mean, he will change his mind in a week. And that's kind of what my job is. I'm supposed to remain open-minded. I'm supposed to be able to take information from both sides and then convey that to clients and to people to either, one, keep them invested, or two, make the right decisions, whether it be on their business side or whatever, right? And I mean, right now you have a US S&P 500 that is a NASDAQ that's dominated by 5 or 6 stocks. And the next conversation we're going to talk about is going to be artificial intelligence, but more specifically Google I/O. And then you have the rest of the market, which is kind of a laggard. Mm-hmm. Now, rest of the market being the United States and Canada. When you go and you look east, however, you have what was, I mean, if you were listening to this podcast last year or 2 years ago, everybody that was talking about going into this winter, this most recent winter, thought that Europe was going to fall apart.
Yeah.
That natural gas prices were going to skyrocket, that oil prices were going to remain 125 or more, that they were going to freeze, they're going to have rolling blackouts. And we're now heading into summer, and that doesn't seem to be the case. We have electricity prices in our capital region that are darn near all-time lows. Well, maybe not all-time lows, but
Manageable.
Yeah. And that story of people freezing in Germany just didn't come to fruition. And
So this global warming thing really worked out well. Tongue in cheek.
Yeah, tongue in cheek for sure. I mean, I wouldn't want to be in Florida in 35 years, but as an Edmontonian, when you have 30-degree weather in May, you're super happy, right? But what that ends up kind of conveying to me is that we are probably in the middle of what I would consider to be a consumer recession. The data isn't showing that because the savings rates and the amount of cash that was saved up through that COVID period is so high. However, credit and credit card data is starting to tighten, and the data itself is showing that people are slowing down spending. It's starting to hit our travel sector. Airbnb just had their most recent earnings, and while yes, they didn't beat by what everyone thought they were going to. It's definitely, we're cooling here, and it's a good cool, but at the same time, there are cracks. Things are starting to worry me specifically, especially when you start to look away from the AMDs, the Googles, the Amazons, the Microsofts, the Nvidias, the Facebooks, and you start to take a look closer at the smaller stuff, the stuff that, I mean, the consumer uses on a day-to-day basis, the Johnson & Johnsons, the grocery stores, those sorts of things. And while, this most recent quarter was good, the forward guidance is concerning. 5% interest rates are high. I mean, in my opinion, it's probably where we should be. But at that same time, if you're wanting to see continued investment and growth, we're going to have to work through a lot of this tension with how much money costs. Can I actually out-return that with my business venture? And there's going to be a lot of tug-of-war there where people are really starting to figure that out. And it's going to take a while to digest. If you're going and raising money from investors, they're concerned. They're not going to just hand you cash anymore. And the hurdle rate for good ideas is really high right now. And you've got to compete with AI. You have to compete with something that is incredibly exciting. And that real estate deal at a 4 cap just isn't sexy anymore.
Isn't doing anymore. I'm wondering, going through, you have chatted about this a few times over the last, year really, but definitely in 2023, and talking about, some of the rebound, especially from kind of the big 6 that you just talked about, or call it 8 or 10, top 10. And you're saying, from a forward-looking standpoint, the rest of them might not be looking so hot when you're considering consumer spending, potentially tightening. So from that standpoint, or how I think of it, I guess, and maybe some of our listeners do too, and I'd like to get your kind of opinion back, is if that happens, how much more do the Googles and the Apples and the Nvidias have to do in order to balance things out? Are they capable of doing that to balance out the performance of the S&P 500 or the NASDAQ or whatever it might be? And in my head, I'm like, no, there has to become a breaking point where, especially considering the fact that the Apples and the Nvidias and the focus of those companies have completely changed. They're cutting, they're focusing on profit. They maybe have big projects. AI, obviously they're still sinking money into and investing in, but that's kind of, a major thing that if you're not on board with, this is the way of the future for a lot of those companies. So they're going to be putting money into that. But in terms of other investments that they might be in a low interest rate market or a low interest rate environment, they're not making those same kind of investments that's trickling down to the rest of the economy either, which is going to prop up the values of a number of things. So you're talking about true drawback in consumer spending and a lot of these other huge cap companies. Is it this is the kind of you're seeing some indications here where it's woo, I don't know if this is going to look so hot in 6 more months.
I don't think it's ever been healthy to have so much contribution of return being so centered within
the old
10 companies.
All the eggs in one basket argument.
Yeah. And that's not awesome. And I mean, from an employment perspective, it means you don't have a lot of leverage. From an economy perspective, concentration tends to be, really bad because someone can target it just as a way of taking you down, and for lack of a better word. So, I mean, I don't really have much to say on this other than that needs to change. We need some antitrust law. We need something to come in here. We need policy that can redistribute the way in which we spend, the way in which we compete, the way in which people are like going to work. And it's just not showing up anywhere. With all that said, though, I think from a tech investment perspective, the people are very eager to invest in AI right now. And the way in which you're seeing that represented in public markets, people are investing in the Big 10. And Paul Graham had a really good tweet thread recently where he discussed where the winners in the AI revolution are going to be found. And in the past, and the reason why Paul Graham is so important is that he was, if I remember correctly, he's the, what's the accelerator in California? Anyways, for the lack of not remembering, he is well known for being early to especially software. And he believes that AI is likely going to look differently than what the investment outlook was for software companies. So the last 10 years, 12 years, Paul Graham was investing in software businesses and running this Y Combinator.
Yeah, I was just going to say, bang on, buddy. You're good.
Yeah. And this accelerator is incredibly helpful to creating those 10, 15,000 software layer companies that are operational today. And on a go-forward basis, it's his opinion that AI is likely going to be, the benefactor of AI is likely going to look very similar to how he believes software benefited and platforms benefited from the iPhone.
Right.
So you had an iPhone that was a platform in which you could build apps on top of, right? It was the base layer, 100%. AI is likely that same tomorrow's platform. Now, what sort of hardware is going to enable that? I don't truly know. I think a really good place for people to start is actually going to be go check out Odd Lot's most recent podcast, where this guy gives you a really good deep dive into how semiconductors affect artificial intelligence. And he kind of just explains the economics of the whole entire industry, which I think is important for people to understand because you have all of these large language models. These large language models being owned by OpenAI and then Bard being Google. And according to this fellow, he mentioned that it was something like on the measure of 176 billion computations that were run to train the single model for OpenAI, which cost roughly 80 million. Now, this training is happening every single day. And the estimated cost to produce the ChatGPT 3 was something in the range of $300 to $400 million. Now, the next one is supposedly supposed to be $1 trillion in size, quadrillion. Anyways, the factor is absurd, and the scale is insane. And basically, you're going to have a very few amount of people that can actually do the training, afford the training, and you're going to build on top of that again. So now you have these hyperscalers, these big 10 or big 4 that have already gone through this, and then you're going to have the opportunity that lies ahead in which you're going to then come and build the apps that are built on top of these platforms, these large language models. And I think that that's an interesting way of visualizing it, right? You have that combined with, there being a new world with regards to AR and VR. But when you think about AI, it is the hot topic. It's the only reason why the NASDAQ has really started to rip versus the S&P 500 and the Dow Jones and microcaps. It's the only exciting thing at the moment.
Yeah. Why do you think, you just mentioned 2 other things like AR and VR, and how there was obviously a lot of buzz around those 2 things, and there continues to be to a degree, I would say. But why do you think this is just leapfrogged? I think this is something. If you were to ask me a year ago, 2 years ago, what the next big thing was going to be, or what me as someone who would not be on the bit in terms of tech advancement, etc. Because the way I look at it is this is the language models, ChatGPT, Bison, I think is the new one that Google. I'm just reading.
It's always an animal.
It's always an animal. The fact that it's easy to use. I don't know. I get like there needs to be something that you need to learn. But I mean, you talk about people just on. You can go out for dinner. You can play with this thing, right? You can just sit around with your friends or your kids, and you can play around on this, and for relatively low cost, obviously. And it's so easy to access. I would say, and obviously the way in which we're going to be doing work and the way that we're going to be using this in the future, who knows? But that ease of use is something, and the barrier to entry to that is so interesting because you talk like, is AR and VR a cool concept? For sure it is, but what's the accessibility for people using that on their everyday? It's more of an entertainment thing than it is an actual use, I feel like, and I feel like that's a big reason why this is leapfrogged right to the top.
Yeah, I mean, it's a killer app.
Yeah,
crypto is looking for this for, I don't know, the last 10 years, and it hasn't found itself. Mm-hmm. I mean, a lot of people always thought crypto was going to have to find its a wallet solution in order for people to truly for it to take hold for your grandmother to go and use this.
Exactly. Yeah.
My grandma can use ChatGPT. I don't think she is, but she can.
She could. Yeah.
I mean, in 2 months, it reached 100 million global monthly active users. Instagram, it took 28 months. Facebook took 54 months. And Twitter took 65 months, just to compare. TikTok was 9 months. So ChatGPT, relative to these other massive hyperscale social media platforms, is growing faster than anything in the history. And I mean, I think that speaks to the interconnectivity of our world and our life and the way in which we live today. But I also speaks to the ease of use, that anybody can do it. I mean, the fact of the matter is, like you'd mentioned, you can go to dinner and use it. Yeah. And that wasn't the case with any sort of crypto app. Yeah. And it's even worse with AR, VR.
Yeah, exactly.
Like, I'm not putting on AR, VR glasses. Josh Wolf has a statement where the directional arrow of progress is having less interference with your technology on your day-to-day. Yeah. And I mean, I've seen a bunch of releases just this past week where you have the next stage with your cell phone is likely that it's going to be something more closer to what happened on Star Trek, right? Where you have it emitted onto a table or onto your hand or something like that. And while that might be true, it's probably pretty far into the future. Yeah. That's how I kind of think about all killer app options. If you're looking at an investment opportunity and it seems cumbersome, that's not a good idea. It really has to be easy to use. Yeah. Especially if it's going to become incredibly viral. So
I always think about and I don't mean this in a negative way at all, but like lowest common denominator. I always think about that when you're just thinking about using anything. You have to think about, in order to reach mass, in order for someone to be understood en masse, you need to consider who's, from a understanding standpoint or an accessible standpoint, whatever it might be. You have to think about that. You can't design it for the 1% of people who would be on your level, right? And I think sometimes you can easily get caught up. Like, I mean, there's tons of, little newsletters or, accounts you can follow on Twitter and stuff like that, where they, you see the technology coming out of MIT or, some random tech company has designed, take your pick what it is, but something that's, this is a really cool 1 minute video. And that's all it is. It's a cool 1 minute video about a product being developed and being used, but no one's ever going to, why would you spend money on something like that? And it's just, again, I think we're seeing less of that. And with the environment that we're in, like the investments that are going into those kind of things that aren't necessarily usable on a wide scale are not being invested in and are probably going to continue to not be invested in. It's going to be more focused investment as we talk about, or as we have talked about at length.
As an extension to common denominator or lowest common denominator, I think it's also important to think about what the economics of that product might be. Mm-hmm. Because if it's going to be commoditized or it's an aggregator being think about Ben Thompson's theory here, where aggregation theory, where you bring all people onto a platform and then you can then leverage that into higher margin products, that being advertising with regards to Facebook and Google, TikTok, et cetera. With this, it's effectively commoditized computation and chat prediction or word prediction. So it's commoditized that, aggregated you there. What are they going to build on top of that is a higher margin business product so that they can actually make real money here? Because at the end of the day, commoditized products are a terrible industry to be in unless you are at scale, large hyperscale. So anyone thinking about building products or anything like that, the best way to think about it is around the idea of margins here. I mean, you could build something that gets, if you need mass adoption to make good money on it, don't do it. Go and find something with higher margin that only requires maybe 1,000 customers or 100 customers, right?
Yeah.
So always think in reverse back from that, the economics of that idea, right? It's just such a waste of time to pursue an idea that needs 100 million users.
Yeah.
I mean, it's not a waste of time. It's just incredibly hard, and you need to have that like, aha, this is absolutely amazing. There's very few people that can take something that is clunky and not that great of an experience to 100 million people. I mean, I can only think of one recently, and his name's Elon Musk. So if you think you're him, go ahead.
Yeah.
But let's assume you're not.
So quickly before we move off of the AI stuff, I guess you wanted to quickly maybe chat about Google I/O and maybe some of the cool things or interesting things you saw out of that.
Yeah, so they had an investor day where they talked about their family of apps. And I mean, some of the stuff that really hit home for me was just how big Gmail is, how big Google Maps is, just the sheer size of their apps that they choose to make no money on is just amazing to me.
Well, you asked me the other week about the idea of moving away from an Apple phone or from an iPhone, and Apple products in general, and whether or not I'd be, as we sit here with our MacBooks. And I, kind of gave you the on the fence answers I normally do with some of those things, but it would just be very hard because it's so intertwined into our life. Now, like from a Google perspective, to your point, like you don't really think about how big some of these things are. Like, I mean, for sure, maybe the change in me opening up my Google Chrome app to ask it questions, like that's something that I could see changing with everything that's happened. Now it might be another Google product at the end of the day that we might be using on our phones, but from like the Maps perspective, especially, like that's something, it's so intertwined. Like it's amazing how that's just been not effortless, but just like even when the selection comes up on apps, when it's like, what do you want to use?
Oh, yeah.
It's like Google Maps, obviously. Like I know actually I'd seen a few things or notifications, I think through the phone, like through our phones, maybe I'm not sure if you got them as well, talking about Apple Maps, like them like investing in that more, trying to improve it kind of thing. But I think that's so far gone. Like, I mean, again, that's just something that's an example of a product or service that has just been completely intertwined into our lives where it's just an automatic. And it's, interesting that Google having these products already makes me, and you talked about predictions on which language model and which quote unquote chat GPT equivalent is going to become the winner at the end of the day. And I feel like, again, maybe we talked about Google being maybe a bit slow moving and a bit ignorant maybe to their competition to begin with, but maybe they're being pretty agile to change that narrative, because I think they have the backing, the knowledge, the resources to really come through as the winner here.
Yeah, I mean, and this is my little shift, but I wanted to mention this. Palmer Luckey, who was the founder of Oculus, tweeted yesterday that he tweeted this: the Apple headset is so good. And Palmer Luckey is kind of a dick, but very honest. He left Oculus in a roar, and it wasn't great. He founded a more recent military business that has since become a unicorn, Anduril, and they basically create drones and missile launching equipment and detection and that sort of thing. Kind of falls in line with Oculus and the type of business that it's run, but it being one of the first startups that were able to then demand a decent piece of the U.S. military budget that wasn't Lockheed Martin or Raytheon or Boeing, et cetera. A very talented guy, but he has just recently clearly had access to their most recent headset, which is super interesting to me that he made this comment, because it went super viral, being that it's him, it's high praise. So what ends up coming from that, I think, is really interesting. I saw a really good tweet or article from Ben Thompson talking about, if this headset is great, the current clash of Facebook and Apple is likely going to re-engage because they benefit so much from one another. The Apple phone wouldn't be so compelling if it didn't have the app layer that made you want to use it so much.
Right.
So the future of the headset likely requires the same thing. So while Apple has, for the last 3 years, kind of made Facebook, Instagram, its family of apps, its direct enemy, they are most certainly frenemies in so many different ways. They need one another to the extent in which they don't want to admit it. It is what it is. But the future likely includes them both. And the reality is Facebook is and continues to be one of the largest investors into artificial intelligence, all of these layers. And I wouldn't be surprised to see some sort of integration there. They're building a platform and software for these items. It might not be that we wear an Oculus and we do end up wearing that Apple headset. That wouldn't surprise me. But the layer in which what goes on top of it, it's likely going to look a lot like yesteryear. So we'll see. And a lot of people are just talking about the ways in which we think about artificial intelligence and the way in which it probably is going to empower VR, AR. We can't truly fathom yet, but I'm interested to see where it goes. So moving on, Cam, what do we have next here?
Well, I think we wanted to quickly touch on maybe a little interesting thread that you had posted in regards to Eric Nuttall, and maybe just quickly talking about, a little update with oil, and maybe kind of ducktailing that into a bit of a discussion on our Alberta election that's coming up.
Yes. Okay. So Eric Nuttall, for those that don't know, runs a ETF that invests in the oil and gas sector. He is often on BNN, very well-renowned, had an incredible year last year from a returns perspective. He talks a lot about oil demand. So when you're an oil investor, you have to have a macro outlook because you're betting on consumption. And he always puts together really great threads on just kind of where we're sitting. And he aggregated all of this commentary from refineries. So you have oil and gas drillers that pull oil out of the ground, and then you have people that distribute it, those midstreams, and then you have downstream, which is your refineries. There's refineries like Phillips 66, Marathon, Valero, PBF, Imperial Oil sometimes does it. Integrated companies like Shell, they'll do a lot of it themselves, where they'll refine, distribute, and drill. But anyways, he was kind of just talking about the commentary from the most recent earnings calls, and all of the refinery business CEOs were effectively saying things are pretty good. It's Gucci. And whatever that necessarily ends up being, they tend to have their finger on the pulse. And a lot of the commentary was revolving around COVID, lockdowns, China, reopening, Europe. I mean, it just so happens that India and China are half the globe. And if they are back and then growing, it's likely that oil demand continues to stay elevated. So
it's one of those things too. I find it's sometimes it's hard to separate the two things. Like when you have rhetoric around, I guess, international tensions. I mean, right now, I think we would be at there's heightened tensions in the world. I mean, sometimes it doesn't get as much play because we have so many news stories every single day. I mean, ever since the Trump era of presidency, I think we've got into this, the content world in terms of the news stories on kind of the mainstream stuff that you see is always going to be in your face, huge, massive story for a day. And then it moves on to the next, whatever it might be, next controversy the next day. And, I think that's one of Donald's legacies as it currently stands. And he's looking to reinvigorate that legacy as we speak. But from the perspective of this, it's just, oil consumption, there's only so many sources, there's only so many players. And just because there's tensions in some parts of the world kind of thing, it doesn't necessarily mean that, those things don't go anywhere. So it's a very interesting, I guess, part of the market and of our world economy to follow, because yes, it's volatile, but watching the spikes and changes in demand and supply, et cetera, is just, it's very interesting. And it's not necessarily connected to one one exact thing where you can just say that's what it's going to be.
Yeah, you can't. And it's kind of like when you see a house go up for sale in a neighborhood, and let's assume you're Vancouver. Everyone knows Kitsilano, right? Mm-hmm. And you got, let's call it 100 houses in Kitsilano or 150 houses.
See, I know the Cactus Club in Kitsilano. That's
exactly. Yeah. We definitely don't own property there. Very expensive area. So you have Kitsilano of in Vancouver, and you got 150 houses. So think about the oil market like you have 150 producers. And you have them all producing. All of these houses exist. They all have a price, but you haven't seen one go down. So you have like, if one goes up for sale, it's resetting the price for everything. It's kind of like the NHL with Ottawa Senators going up for sale. It's repricing all the other teams, right?
Right.
Well, that's kind of the way in which the oil market works in a lot of ways, where if one goes down, it reprices things. Or if one sees new restrictions on who they can sell to. When you have the largest house go up for sale, let's say Chip Wilson's house goes up for sale in Kitsilano, or the New York Rangers sell. I mean, it's a big deal. It reprices everything again. So that's kind of how I treat. It's the marginal buyer does have a huge impact, or the most recent disruption ends up having a huge impact on price. But oil prices do matter a lot, and it's a huge input to the cost of goods for a lot of companies and for a lot of people. As a percentage of their wallet spend, oil is a huge piece. Gas is a lot. I know from my house, it's expensive to keep it running, right? With all that being said, it is even more important for the Alberta election and for our budget. And that is one of the hottest topics for sure. We have, Monday morning, we're recording, it's around 9 a.m, and you have WTI that's trading around 71.27.
Yeah, a little lower than predicted.
A little bit lower than what our budget has been predicting. I mean, last summer and around August, we had $125 oil. Alberta was doing real good at that point. 70, don't get me wrong, it's good, but that budget surplus that we anticipated, I think it was like between 10 or $20 billion. It's unlikely to look the same if we don't see that predicted number, right? So I believe that falls between 75 and 85.
Yeah, I think that's correct. Yep.
Yeah. And I mean, as of right now, we got 14 days, 11 hours until our provincial election. Yeah. And you were telling me right before we sat down that this is going to be the tightest election that we've seen in recent history.
Yeah, I think I'm not going to quote any specific outpost on this, but I saw a number of tweets in the last few days, just, predictions kind of on both sides or showing both sides of the aisle winning. But I think the biggest thing I took away from some of the predictions is like I think I got the robocall the other day and asking about, which party I'm going to vote for. And the fact that it's going past two names is always surprising to me. Just given how much oxygen the other two are taking up, or the UCP and the NDP are taking up right now. Like, yeah, you can vote Liberal. Yeah, you can vote Alberta Party. I think there might be one more. Excuse my ignorance. I kind of focus on the big ones. But in the projections that I saw, again, every seat spoken for by either NDP or UCP, and within a couple of seats of each other either way in some of the predictions. So I've had more, I know you said that you haven't had any door knocking lately, but I've had 2 or 3 over the past couple of weeks. I was saying to Joel too, I don't know if I've seen the amount of signs in the most recent election. Like, I mean, they're obviously everyone has their signs out in front of their house kind of thing. But I mean, going around my neighborhood, it's orange, blue, orange, blue, orange, blue, like every crescent I pull down. So I think even just taking something kind of anecdotal like that and projecting that out, I think it's very interesting to see what these come back on. And I think it's going to be very, very tight. And like every single person that has door knocked with me said the same things. All their projections, they're saying this is going to be very tight. Every vote's going to count. So they're obviously making sure that point is kind of driven home when they're talking to people. And the other thing, like we've had, in general, I guess in Canada, our election turnout numbers are not spectacular. So it's going to be interesting to see what those numbers come back with too. But, only 14 days out, I feel like I'm someone who always tends to forget. I asked Joel to check for us right before we started recording. So this is also kind of just a reminder. Obviously, we're a big proponent of voting. I think you and I have both voted in every election that we could have since being 18. I think it's something that's very important, especially for, I think a lot of folks listening to this podcast would be in the same boat as us. And, obviously just put that on the calendar, make sure you're you're getting down and voting? Because again, this is going to be a very tight one.
You have no right to complain if you don't vote. And that's the only reason why I vote, is so I can complain.
I mean, and you need that right. So
I do. Without it, what do I have? But
this hour every week, but that's not quite enough for how much you have to say.
Exactly. But I mean, generally speaking, until very recently, and I have to give a shout out to Mel Couette and her Pocket Lobbyist. Great follow. They have a fantastic newsletter that I highly recommend. They have a paid version, and she has a free one that goes out. It is really worth your time if you want to just stay up to date. I know for myself, it's always challenging given the fracturing of media. You don't know where everything's coming from. She does a really good job aggregating Alberta political information. So some of the updates, at least more so recently, I know that the United Conservatives came out with a plan to reduce the lower tax bracket, and Cam, you could probably speak to that better than I can, but the basic savings is at most for someone making $60,000 a year, $750 in tax at the top end. I think if you make 60 or more, you'll save $750. It'll go down incrementally as you earn less, but they're basically lowering the lower tax bracket, is my understanding. They're also dedicating or committing to investing in child and maternal health, increasing the funding for obstetrics and midwifery. I didn't even know that was a word, to be honest with you, but and working to expand newborn screening and supporting important research. Now,
and also
NDP,
also bringing in a new arena for Calgary.
Yes,
so,
huge piece of their Calgary push. Yeah. The Alberta NDP, they're focusing on electricity bills. Obviously, healthcare workers. This one was pretty interesting to me, and I think is a very good idea. They're offering healthcare workers bonuses, signing bonuses of up to $10,000 to attract doctors, nurses, and other allied health professionals to Alberta to help with overwhelming crises being faced with hospitals across the province. And anecdotally, I have a lot of people that work in healthcare as friends and family, people that work on the emergency side, and it is bad. I had a close friend that was just down in Airdrie working all weekend, and the wait times are insane, 9 to 11 hours. He was sending me a picture of their wait time docket for all of the regional hospitals.
Yeah.
And it's ranging from 5 to 13 hours. It's just mind blowing. Not good. So we clearly have to have that as a primary focus. I know for myself, the solution to this hospital crisis is often a moving target, but I don't know what to do, how to do it. I'm by no means an expert in any of this, but that is something that needs to be addressed for sure.
Incentives.
Yeah,
I don't know.
100%.
I think, talking about a lot of topics, we talk about like population, immigration, maybe even, I'm not sure if we're going to touch on it today, but just even talking about, just housing related crises, I guess you could say, in Vancouver and Toronto, what that might mean for people looking for new places to live, coming to Alberta, or choosing a new place to live. These are the kind of things where we want to make sure that we are incentivizing, coming here, and I think doing something with, what's going to speak to someone more than a signing bonus, realistically. So I think that's actually a decent idea. I think, it's funny, again, thinking back to previous news stories and rhetoric like during COVID and talking about, I'm not going to give an opinion on side here because I don't know enough about it, but just the battle essentially that there was in the maybe midpoint of COVID between our government and the healthcare workers. And you kept hearing the stories like we're losing people left, right, and center. And I don't think it was very in your face, or it wasn't easy enough for maybe the common person to understand or see how that's going to affect. And now we're seeing that, right? The laggard on that as people continue to leave, and then you have more people that are out and about in the world, and I'm sure the instances of accidents and sickness, etc., are on the rise. And now we were already under or had a capacity issues before, and now you're seeing that even tenfold. To hear about those kind of wait times, and somewhere like Airdrie, I wouldn't consider necessarily a rural place, right?
No.
And to have those kind of, because a lot of the talking points are about how in rural places around Alberta, how they've had huge issues and had to shut down certain days and had to bring people into the major centers. Airdrie's right on the welcome mat of Calgary.
Yeah,
and,
I would venture
to see
to
something
guess
like that.
That Airdrie is the fastest growing part of our province. I would bet. So yeah, concerning, no doubt. And I provide no additional context here. It's kind of outside of my purview. And quite frankly, I tend to listen to my friends as much as they like to complain at me. I always like to come back at them and complain to them and be like, you have it pretty good. I was at the Oiler game and the entire lower bowl is all doctors. Yeah. So like they're still doing okay.
Yeah.
But with all that said, I think
it's all the support
well too.
And it's all the support staff too, right? Yeah. I mean, you're only as good as your team in most cases. So we need to make sure we're focusing on all areas. So I guess overall takeaway from that whole topic, make sure you're with 14 days out. So do your reading, get your questions answered, and make sure you turn out to vote in a couple weeks.
Yeah. This is the first year where I'm like not confident in who I'm picking to win. So
yeah, like I said, these prediction models and the polling information, it's tough. Like, I mean, I know how I answer a lot of those questions, don't answer a lot of those questions when I'm getting the robocalls, et cetera. So I know that's what a lot of those things are based off of, obviously phone calls or door-to-door knocking kind of things. So, I mean, you get a lot of people who aren't participating in that, but at the same time, when there's smoke, there's fire. There's got to be something there. And the fact that even the candidates themselves are really making it a point to say, hey, this is going to be very close. So make sure that you are making time to get this vote done.
I highly recommend people take a gander at Druckenmiller's Sohn conference interview. It was phenomenal for anyone just to get a feel for what a true professional investor sounds like, thinks like. Great place to be. And then also there was a Masters in Business episode where they interviewed Howard Linsden, and he had a really good quote that I thought was relevant and important, at least for me anyway. And it's around the lines of, whoever created the MBA curriculum and named it is an idiot. It's like a Masters in Business basically.
Yeah.
But at that age, how can you have a Masters in Business? You have to have losses to become a master. And I think that that's super relevant and true. He's in his 50s and he's got his MBA.
Yeah.
But he said he wasn't a master in business until now. And I think that that's true. I mean, getting your MBA at 28 to 33, you haven't truly become a master in anything until you have some losses and some wins. And I mean, as I get older, I realize that more and more. So
totally. I think you'd already alluded to what I think I was listening to it on the way here. So that Ben Thompson piece, like Google I/O and the coming AI battles. It's a short little episode podcast you can listen to. So I thought it was, obviously did a little bit of prep before getting in here for that discussion, but it was a good one. So always great stuff coming from Ben.
Yeah, highly recommend the newsletter this week. I have a lot of great threads. While the news was boring last week, I had some really good stuff that I read, and I couldn't. I kind of distilled it all in that newsletter. So give that a check. As always, Cam, it's good chatting, and I look forward to doing this more often in our new location.
Yep, excited for the future of the podcast. Thanks to our team here, and we'll talk to you next week.